ADKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, today, last-minute pieces of advice for taxes. Today, we're going to take a look. Stay tuned for Prudent Money. And you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Well, so the deadline is fast approaching with the IRS. How about some last-minute pieces of advice? IRS expert and Prudent Money contributor Dan Pella is here to tell you what you need to know. Hey, Dan, welcome to the program.
Hey, it's my pleasure, Bob. Thanks for having me. How you doing?
I'm good. So how busy is this time of the year for you? I know you don't do a lot of tax returns, but is it busier than normal?
Well, I don't prepare any tax returns myself, Bob. As you know, I get into the act after the IRS calls the return into question, and then I deal specifically with individuals and small businesses that have tax enforcement problems. Maybe they're facing a wage levy or a bank levy. They've got some notices. Maybe they're being audited. Maybe they've got a collection problem. They owe money to the IRS that they can't pay. That's where I get into the act. Now, my firm does tax return preparation, but most of it's remedial. So if somebody comes into the office and they say, well, I haven't filed my tax returns in the last 7 years. We'll get them caught up. But that's mostly what we do. Now, it is busier this time of year, Bob, because of the heightened awareness of the problem. So if somebody's got a delinquent tax from 3 years back, and now they've got their tax return, they're getting ready to file. It all starts to bubble up again, and so people get more. Shall we say, energized about getting their problems fixed than they might otherwise have been. That's what's going on here.
Well, the good news is you will always have a job.
Well, that's unfortunately true. I'm dedicated. I think unfortunately, and I'll tell you why. I think I'm the only guy in the country that's dedicated to putting himself out of a job by working to abolish the IRS and the income tax entirely.
Well, as long as we have politicians, I'll put it to you this way: you've got great job security, because they probably will never let that happen.
Well, not only that, Bob. Not only will they not let that happen, they won't let the Internal Revenue Code itself settle in to some sort of a static condition where people know from year to year what the law is. They're changing the law constantly. The federal income tax laws have been changed more than 6,000 times just since 2001 alone. That doesn't even count all the changes that occurred with the CARES Act changes and the COVID changes that occurred in 2020 and 2021 and 2022. So, I mean, they cannot leave the law alone, Bob. There's always changes that are being made on a regular basis.
Let's talk a little bit about the up-and-coming tax deadline. And I realize we've talked about this as recently as last time that we visited. However, I don't want people to miss this, because as we deal with the IRS, whether through a problem or just filing a tax return, I think we need to understand the state of the IRS. And it's been 3 years since the country was shut down from COVID, and the IRS got just horribly disorganized. What are we looking at right now as we try to deal with the IRS at tax time?
Yeah, that's a good question. First of all, as far as the backlog is concerned, to their credit, Bob, the IRS is digging out of the backlog. And the most recent numbers that I have, first of all, for context, they were backlogged as many as 30 million tax returns. As recently as about a year and a half ago, and that number's been cut considerably. They're down to plus or minus 4 million tax returns that are backlogged. But the other part of the problem is taxpayer correspondence. When people send letters to the IRS, those letters have to be processed. Those letters have to be dealt with. And the IRS has backlogged about 5 million incoming letters from taxpayers responding to IRS notices and so on. And this is a real problem, Bob, because they're telling us the backlog is about 270 days, 280 days. So that's, what is that, 9 months roughly. And most of these notices that people are responding to are time-sensitive notices. For example, if the IRS mails out a levy notice that says, Bob, you owe the IRS $20,000, and if you don't pay within 20 days or 30 days, we can levy and seize a bank account unless you respond in writing by requesting a hearing. Well, okay, you respond in writing, you request your hearing, you got 30 days to do it. Let's say you respond within 10 days, so you're well within the window, but it takes them 9 months to process the doggone incoming mail. So now what happens? It's a real problem in a lot of areas for sure.
So let's just take a look at what's coming down the pike. I mean, you have a brand new tax deadline. How much further does that put them into a backlog?
Well, that's a good question. There's about 80%, maybe not that many, maybe 70% of the tax returns that are filed electronically. But even the electronic filings were backlogged. We've had clients that filed tax returns electronically that have been filed for, a year or in some cases 2 years that still don't show up on the system. So even the electronic filing system is backlogged and has been for a while. As I said, it's getting better, but it's still backlogged. So if you file your tax return, let me give you a tip here for the listeners now, for folks that are filing their tax returns here in the next week. If you're going to paper file the return, make absolutely certain that you mail the tax return either by certified or registered mail or by U.S. priority mail with tracking. You, as the citizen, have the burden of proof to show that the return was filed on time. So if you just walk across the street, drop it in the mailbox, and then go on about your business, and the IRS processes that return in June, let's say, there's no guarantee that they're not going to come back and hit you with a penalty for failure to file. And if they do, the burden of proof is on you to prove that you filed the return on time. If you use certified or registered mail or U.S. priority mail with tracking, you can absolutely demonstrate your filing date, and that's not a problem. All right, so you'll be able to defeat any penalty. If you file your tax return electronically, as most people do these days are filing their returns electronically, you must make sure that you get back from your tax professional who files the return, get back a e-filing confirmation. All right, so in other words, when that return is sent into the IRS's computers, their computers spit back to you an e-filing confirmation code. Now, the problem is, Bob, that code goes to the tax professional who e-filed the return. It doesn't go to the individual taxpayer who authorized his tax pro to file the return for him, right? So you as the taxpayer need to get a copy of that e-filing confirmation that comes back from the IRS's computer systems. That is your proof that you e-filed the return. Now, I'm going to tell you a story here. I just settled a tax court case for a client back in December where the IRS alleged that he didn't file his proper corporation documents and his proper corporation elections, and they were e-filed. And the IRS said that they never got them. If we didn't have that e-filing confirmation that came back to the corporation tax, corporation CPA, we would have been at a loss, Bob. And this was a multi-$1,000 case. I believe it was about $160,000 of tax liability that the IRS said this guy owed because of all what they said were messed up corporate elections. Well, none of them were messed up. They were all done properly, but it was our burden to prove that they were filed on time. And we were able to do that because I had the e-filing confirmations that I got from the CPA. Most people don't keep those things, Bob. You need to save that stuff because the burden of proof is on you.
Let's talk a little bit about deductions that people are hesitant to take. And, of course, with everybody moving home, you start to look at the home office deduction. And I've talked to people through the years. I know that you've talked to many, many, many more that are just, I just don't think I want to do that because I don't want to bring up any red flags. Talk about how to approach the home office deduction and why, if you've got a legitimate deduction, you should take it.
Yeah, I never ever shy away from claiming legitimate deductions because of fear of audit. All right. First of all, you have really no way to know what triggers an audit. The vast majority of audits are triggered through a computer process that compares every line of your tax return with national and regional statistical averages for a person in your same income category and profession. If any line of your return is out of sync with the averages, the difference is scored. So the farther away you are from the averages, the higher your score is. It's called a diff score, and therefore the more likely it is that you're going to be audited. But the problem, Bob, is we don't know what the diff scores are, and we don't know what particular entry is close to the average or far away from the average. You just don't know. So here's what the rule is. The rule is if you can prove that you're entitled to the deduction, then claim the deduction. Reduce your tax liability to its lowest legal level. There is absolutely nothing wrong, immoral, or illegal about claiming deductions that you're legitimately entitled to claim. And I would argue that you got a responsibility to your family to reduce your tax liability to its lowest legal level, so the resources are available to yourself and your family and your business, and not paid into the government, and Lord knows how they squander that money. But the squandering is another subject. The point is, Bob, that don't be afraid to claim deductions just because you think it might be audited. What you have to do is understand that you've got the burden of proof, and as long as you can prove the deduction is legitimate, you're going to keep your money in your pocket where it belongs.
So talk a little bit about what you would consider when you're deducting a home office. I mean, it's got to be space that is dedicated to a home office. I think that if I got that right. And what's the IRS look at?
Yeah, a home office, a space used in your home, can be deducted for business purposes if the space is used regularly and exclusively for business purposes. So note those two terms. It's got to be regular, which is consistent, ongoing, once a week, 4 times a week, 7 times a month, whatever it is. There's no rule that says it's got to be X number of times. It just has to be regular. So it's got to be an ongoing use of the space in the home. And then it's got to be exclusive use. So the space in the home can't be used as an office during the day and a TV room for the kids at night. It can only be used for business, nothing else. Now, here's what's tripping people up, Bob. The home office space cannot be claimed as a deduction for employees. All right, so if you are an employee working for another company, even though they sent you home, you can't claim a deduction on your tax return for that home office. And the reason for that is because a home office deduction is normally considered to be an unreimbursed employee business expense. Well, effective January of 2018 with the Tax Cuts and Jobs Act, there was all of the deductibility of all of the unreimbursed employee business expenses was eliminated in favor of doubling the standard deduction. So the standard deduction for a married couple went from about $12,500 a year to over $23,000 a year. So they doubled that in exchange for eliminating this otherwise cumbersome employee business expense deduction. So you're not going to get a deduction if you're an employee. If you're a self-employed person, you can claim the deduction, but there's an additional rule for self-employed people, and that is that the home office has to be your principal place of business. And what that means is it's got to be the key location where essential elements that are critical to the success of your business are carried out. These would be things like doing your computer work, making your sales, doing your shipping, doing all of your internet work, your billing, and so on and so forth. Tasks necessary to the success of the business are performed in that home office, and there's no other place available for you to perform these tasks. All right, if you meet all these rules, you have a deductible home office. Bob, I have all of these rules laid out in detail in my latest book, Dan Pilla's Small Business Tax Guide. I got an entire chapter in the book that discusses specifically and expressly the home office deduction so people understand how that works.
And once again, if you want any information on Dan or the books, he's written a lot of books, taxhelponline.com is where you would go for that information. I'm sure this deduction would fall in the same light as the home office deduction, but what about the employee that does occasional driving for work, and the company doesn't really reimburse for the mileage? Is that employee able to deduct that mileage in any way?
Yeah, unfortunately, under the tax law right now, they are not, because that mileage would fall under the category of an unreimbursed employee expense. When you are an employee and you are incurring expenses on behalf of your employer, the best thing you can do right now, given the state of the law that it is to negotiate some kind of a reimbursement plan with the employer. All right. So if you submit as an employee, if you submit your expense records to your employer and the employer reimburses them, that's not income to the employee. All right. So you don't have to pay income tax on that. You just get your money back for the expenses you incurred working for your employer. That's the best thing to do, is negotiate directly with the employer to get some kind of reimbursement package for your expenses.
Now let's talk about, you've talked a little bit about dealing with the IRS. Now I want to take it down another level and talk specifically about how do you go about contacting the IRS, considering how things are so disorganized. This would probably be after you've gotten your tax return in, you get that letter in the mail, and you need to contact and get things squared away. What's the best way to go through that?
Well, you should always deal with the IRS in writing, for one thing. So if you get a letter from the IRS that says, we need this or we need that, don't try to call them, even if you think you're trying to call to get clarification, because who knows what kind of information you get from the IRS. If you can get through, this is one of the other problems we've got with the IRS right now, is the level of service with its telephones. It gets, I think last year, the number was about 170 million. Think about that for a minute. 170 million phone calls into the Internal Revenue Service last year. And Bob, the level of service with those calls was barely 15%. So that means out of every 100 phone calls, 85 people didn't even get the phone answered. Never mind getting help from the IRS on the other line, or on the other end of the line. So my best advice is don't even call the IRS. Deal with them in writing. Now, yes, we got the problem of the backlog, but at least with mail, using certified or registered mail or U.S. priority mail tracking, you can always prove that you responded. And you can always then undo anything that the IRS does because they think you didn't respond. Now, if you're in a situation where you're struggling to deal with the Internal Revenue Service and you can't get through, maybe your letters are not getting answered, or maybe you are making phone calls and they're just not getting answered, you need to know about the Office of the Taxpayer Advocate. There's an Office of the Taxpayer Advocate. There's a taxpayer advocate in every state in the country, and these folks have their job is to function as a liaison between the IRS and the taxpayer, and their responsibility is to step in and help taxpayers sort problems out when things go wrong. Right? So when you don't get, when you've hit a log jam with the IRS somewhere, you're not getting through, you're not getting your problem solved, you're not getting your letters answered or your concerns addressed, the taxpayer advocate can get your case to the head of the line, so to speak, to get somebody assigned who can sort out the problem with you. So everybody needs to know about the Office of the Taxpayer Advocate. Very important function, and they are on the side of the taxpayer for the most part.
So this would be the answer to the next question, I would assume. You're in a situation where you have time-sensitive deadline. You have a time-sensitive deadline, and you've sent everything in like you're supposed to. The IRS just hadn't gotten to it, and the next thing that you know, they're placing a lien or a wage garnishment on something like that. I guess that's who you would call as a taxpayer advocate.
Yeah, absolutely. We contact the taxpayer advocate for sure. And I had we had actually a number of those situations in 2021, Bob, where the IRS would send out their final notice of intent to levy and notice of a right to a hearing. All right, these are the notices that threaten levy and enforcement action, and these are the notices that carry a 30-day deadline. All right, so you respond within 30 days. When you respond to that final notice within 30 days, the IRS cannot levy a thing. They have to close the case down. They have to move it to the Office of Appeals. At the Office of Appeals, you're entitled to what's called a collection due process hearing. The collection due process hearing is where you have an opportunity to present what are called collection alternatives to the IRS. All right, and this is where you say, look, IRS, I need an installment agreement, or I need to have penalties canceled, or my wife is entitled to innocent spouse relief, or we want to do an offer in compromise. There's any number of collection alternatives that can be used to resolve the case, and those have to be considered by the appeals office when you make this request for a collection due process hearing. But as I said, you get the hearing if you respond within 30 days. If you don't respond within 30 days, then they can move ahead with collection. And we had situations where, while it's true that we responded within that 30-day deadline, they did not process the forms properly, and so we had to go to the taxpayer advocate to get that enforcement action stopped. So it is a very important office for everybody to know, and for everybody to know how to use in case the need arises. In my book, The IRS Problem Solver, I have a chapter in the book that shows you how to use the Office of the Taxpayer Advocate.
Once again, the website to go check out Dan's books, taxhelponline.com, and there's a lot of free information on the site as well. This one question keeps coming up, and we talk about this just every once in a while, is that you've got a situation with your tax return. You can't really explain there's not any space or there's not any place to put any additional information. What is the process you go through to make sure that the IRS knows here's the additional information for that problem so that they have everything that they need?
Yeah, the way you do that, Bob, is with IRS Form 8275. Form 8275 is a disclosure statement. It allows you to provide additional information with the tax return that might raise potential questions in the tax return. And I'll tell you a situation where you might use that is if you've got a high amount of charitable contributions, for example. All right, if you tithe at the rate of 10% of your income, you're giving money to charity at about 5 times the national rate, all right, the national average. So that might cause some eyebrows to rise at the IRS. So you would use an 8275 to provide information to explain the nature of your charitable giving. Another example, which is very, very common, where people get erroneous information returns. Bob, there are millions of erroneous information returns that are filed with the IRS every single year by payers, employers, banks, whatever. And by information returns, I'm talking about W-2s and 1099s. And I talked to a client earlier this week about a 1099 that he received that claimed that he had debt forgiveness income. Well, he had no debt forgiveness income, and supposedly this credit card company canceled out a debt that this guy never had with the credit card company. And so he's got an erroneous 1099. And he's been trying to get the credit card company to rescind the 1099, but of course that's like talking to a wall. They're worse than the IRS, as you probably know. Yes. And so now this guy has to use Form 8275 to provide information to the IRS to explain that 1099 is erroneous, that he never had that income, it's not taxable income to him, and it's not going to show up on the tax return. And that using that Form 8275 can often, not always, but often head off later inquiries and later audits. And so I call it the audit-proof form because, again, it allows you to provide information with the return that answers potential questions raised in the return.
And once again, the date of the deadline is different this year. Talk a little bit about that. We got about 20 seconds left.
Yeah, very quickly, the deadline now is April 18th, not the 15th. The 15th falls on a Saturday, and the 17th, which is the Monday, is a holiday in Washington, D.C., so it goes over to the 18th. April 18th. You got a 3-day reprieve, Bob. 3-day reprieve.
There you go. Well, taxhelponline.com is where you'll find information about Dan and all of the books he's written. It's a great resource for dealing with the IRS. Dan, as always, great to talk to you. Looking forward to next month.
It's my pleasure, Bob. Thanks for having me.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. One of the things, I think one of the most important things that I've learned from Dan through doing interviews with him over 20 years is that there is really good process that's put in place to handle your situations that can come up with the IRS. And you just got to know what you're doing. And which is one of the reasons I love having Dan on, because he's talks about his books, and in his books he just goes by step the steps that you take. And the one thing that he always says is you never have to fear the IRS because there's always process. So once again, taxhelponline.com. This is Bob Brooks. If you got a question for me, please go to the website at prudentmoney.com and send it in because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.